Hi guys, Assalamu alaikum. This is Mubassir and you're watching TBM. In today's Tabsara, I will walk you through the markets on three asset classes: the dollar index, the euro dollar, and the S&P 500. What you see before yourself is the DXY, the dollar index. And in the first video that we talked about last week, I'll do a quick recap of what we discussed and how price panned out for the week that just closed. And that was specifically for the dollar index because it was the first video. I was unable to cover both the euro dollar or the S&P 500, but that was an essential part of an introduction as well, so that was important. But in this video we'll cover all the three asset classes, and I'll quickly take you through how the previous week closed out, how it panned out against our expectations, which we discussed in the previous video, and I will then lay out my outlook for the coming week, so those of you who are trading these assets can have that understanding and anticipation of what price might do in the coming week. So without further ado, we will jump right into this. I will first just take you through the intro and the disclaimers, and then we will get to business. All right, so now we're at the dollar index. This is the weekly time frame. This was the last week discussed. What we saw here, this was the anticipation. See how price, when we were here, I gave you my anticipation of how I believe price will crash through this high and maybe this high, and see how price panned out. Beautiful delivery, exactly as anticipated. I was very adamant on not calling it a target because on the weekly time frame we are identifying our anticipation on the direction, whether price will move up or down. So in that regard, exactly as anticipated, this red line on the weekly level, this high, it got breached on the upside. The dollar was very bullish, exactly as I had called out beforehand, and it did not crash the second level. That was the second possibility of what might happen. But whenever the markets give us the opportunity to enjoy a win, we should enjoy that win and use these wins for the confidence to build our belief and confidence that we are precise and comfortable in our anticipation, and we can then take trade setups which help us win in these markets, in this industry. So for the week ahead that is to pan out, right now in my local time it is early Monday morning around 12 a.m. The markets have not opened, and I am working on my anticipation for the week to come. The week to come, an important data point, the CPI. The CPI numbers are set to be released in the coming Wednesday, and that is a very important data point. I'll talk about its significance because it talks about inflation number. The consumer price index is used for as a judge of inflation, and the US Fed puts a keen eye on how that number, what data that number presents, because if inflation is above, strongly above the two, as long as it is strongly above the 2% target for inflation, the Fed will keep on raising interest rates, and that has a direct impact on the US dollar. As the interest rates go up, the dollar goes up, and vice versa. The third stream of this channel, where I will be talking about, I'll be sharing my tabsara on macroeconomic events, on market moving news events which move the markets. That is the stream on this channel where I will be talking more in detail about things exactly around the fundamentals that move the markets, like the relationship between inflation number and interest rates, and how that influences the market's directions, and that will further complement your understanding. This is one perspective of looking at the market, especially for someone like me and those of you who are watching who trade smaller time frames, let's say day trading and scalping. Your primary focus of attention is on the charts as well. But your large hedge funds, your investment banks, those big players trading billions of dollars assets under management, they put a keen eye on the fundamentals because their positions are a lot of times for the longer time frames, and there it is imperative to have a very close attention to detail on what's happening on the larger level, the macroeconomic conditions, geopolitical conditions, economic conditions of countries, how that fares against currencies, and other aspects which move the markets. And on this channel we'll be covering that topic in particular. But now coming back to the topic at hand, because in this stream we are talking about the chart specifically. So let's see how I anticipate what the dollar will do in the coming week. What we see here is this up close candle. It offered resistance here, strong sell off, yeah, and then we broke through. Now this last week level that I identified as a potential area where price might reach for, this is also the half point, the midpoint of this week. Now I do believe price will hit this level, but whether I believe it will also cross this high, touch maybe the open of this up close candle, that is subjective to how the CPI number prints on Wednesday. Now that is because the CPI number, it makes the markets go crazy. Yeah, it will move the dollar significantly. So on Wednesday, again, it means if the market believes the US Fed will, after the CPI number prints, if the market believes the Fed will raise interest rates, the dollar will shoot up. Otherwise, the dollar will move down. And this, I believe, is a level where we might see a reaction. So let's say if price comes into here, so as of right now, price can go up here or towards the low of this, the open of this, or price might also choose to hit this level and reverse down. And if we choose to reverse down, again, like I said, it depends on what the CPI number gives us, and that will then present. And normally it is also suggested that when you've got high impact news like the CPI or the FOMC giving the interest rate decision, or the non-farm payroll, these economic news events, they cause a lot of havoc. So it's suggested normally to specifically avoid trading those events, because it's maybe not everything is impossible, but very, very hard to get the right reading and get, because I personally enjoy trading with precision. I don't believe in gambling. I don't believe in putting my money at blind luck. So when you're looking for precision in these markets, you want to stay away from high impact news events like the CPI is one of them, which is coming on Wednesday. So when that comes, I anticipate this level as a point where we might see a reaction. If we see a reaction, maybe price goes up and rejects it, uses it as support, and then shoots up. We might see these levels. Or if it chooses to reverse down, we'll look at discount levels along this bullish rally up. So it will be interesting to see how price pans out. Let's quickly have a look on the daily. Now on the daily, we see price go, this rejection here, this gives me a strong indication that price does want to hit this first, because price tried to go down, strong rejection up. So I see it hitting here as a high probability. Remember, I said this previously as well. Trading is not about sure shots or guarantees. No one can predict the future. A successful trader believes in trading as possibilities and probabilities. So you want to take positions that are higher probable outcomes. Based on this rejection, based on the bullish momentum, I believe this is a higher probability. And as I mentioned earlier, since this is that weekly level of interest, I will be interested in seeing how price reacts around this level, and then I will form my anticipation of whether I'll want to go long here or short here. I wish I had a coin I could flip it and then just tell you whether to buy or sell, but that is not how I roll. And since precision is what I offer, precision is what I seek, and precision is what I intend to present to you here, one of the fundamental or overarching messages that revolve around precision is respecting these markets, understanding there is risks involved within them, and trading not based on your wishes or beliefs, but trading based on what price tells you. So on the daily here, and then seeing what will happen. Let's see on the 4-hour. Again, on the 4-hour, I see similar sort of information. I see price going down, getting rejection off of these down close candles, pushing up. I might see something at the midpoint of this candle, maybe a rejection down to maybe go down into this and then react upward. That is something, again, when the markets open, we will see, we will react based on what the market gives us. But until I hit this level, I am bullish, and then I will see how price reacts around here. Now let's jump on, let's leave this at the weekly. Now if we are bullish up until this point and then waiting to see how what the dollar does, on the euro dollar we'll do the exact opposite. Since we are bullish at that level on the dollar, we'll be bearish on the euro dollar. The euro dollar and the dollar index, they are inversely related to one another, so they react to the opposite. Last week, as I had outlined, we were unable to discuss this, but see how price beautifully delivered exactly as I had called out. This was the level that I had marked. Since last week I was bullish on the dollar, and we were here. I saw this strong rejection, and my anticipation was price hitting this level, and see, beautiful price delivery, hits that level exactly as called out. And now that that's done, for the week ahead, as I mentioned, because I'm anticipating bullishness to a certain level, this level, I'm expecting the dollar to be bullish. That means I will be expecting some more bearishness on the euro. So this orange line is a level, is a midpoint. I'll show you on the daily. Orange is I denoted for the daily levels. So this is a level that I was anticipating price to hit, and then by that time, if the CPI number comes out, and if let's say this happens on Monday, we might see some consolidating price action. And normally when you have high impact news events like the CPI, price action prior to it is not that exciting a lot of times. So let's say if price hits this level, let's say on Monday's trading, we might see some consolidation after that, and then the real move of the week will be observed once that CPI number hits the market, and then we'll see how the marketplace react to it. Now let's recall this down close candle, price used it to then shoot up. This, you could refer to this or this, price touches, shoots up, and then coming down. On the daily, see how I've marked this orange line as the midpoint of this candle, the midpoint of this wick here. Yep. So I anticipate, see how price came down, went up, found rejection at this candle, strong rejection down, and I'm fairly comfortable expecting price to come down here, and then it would be interesting how price reacts off of this level. We have lows to target here, we have lows down here. If we're very bearish on the euro, these are levels we can attack, price can attack, but we will have to see how price pans out, especially after the CPI. Let's quickly just hover through the 4-hour. On the 4-hour, we see price coming down, we see it seeking premiums here, going up, strong rejection here. Price showed a willingness to shoot up, but then strong rejection down. Again, this further validates what I shared on the daily time frame, that we might anticipate, we can be fairly confident of price coming down to this level, and then it will be interesting to see how. Now last week, it would be important, let me just reiterate here, as I mentioned earlier, one of the key things that you need to understand about this industry is you need to respect these markets. You need to respect the fact that no one knows the future. Last week, I was fairly comfortable in calling this big move because I could see this as a level that had previously offered support, and I could see price hitting into that level. And this was a healthy move. If we do a quick measure, this is some 90 odd pips of bearish movement in a single week. Now if you're scalping, let's say if you scalp 10 to 15 pips, you have a fair bit amount of setups that you could squeeze out of this move, but you don't get these moves every time. And this is one of those weeks. Why? Because we have this level and there is uncertainty. There is uncertainty that once price comes at this level, it can go up, it can go down. And this is where you need to learn to respect the markets. You need to learn to not trade based on your wishes or your beliefs, but based on what the data gives you. And as I mentioned earlier, especially on high economic impact news events like the CPI, you need to be extra cautious, because some wise experienced players in this industry have said one of the first jobs of a trader is not to lose money. So protecting your capital is one of the fundamental jobs. Making money comes after you learn to protect your capital first. So I guess that is it for the euro dollar. Let's quickly jump into the S&P 500. All right. Last week we were here based on the reaction off of this up close candle bearishness. I was anticipating, and I was anticipating this high, this red line that I've marked. Let me just zoom in a bit more. Price hit it and then some. Again, like I said, since no one knows the future, this is value. You will always shed, you can always shed, you can always leave on the table. But if you got this move, I'd say that's pretty amazing. Again, depends on which time frame you trade at, but this an anticipation of how the week will pan out will give you it will shortlist your setups. It will shortlist or filter out your confusion, your noise. And if you are bearish on the week, you can then filter out your buy calls. Especially if you're starting out, you can use the weekly time frame to filter out and just be a buyer or a seller based on what you're seeing for that week. So we saw this for last week. This happened, we were right, exactly as I called out. Price hit that level, jackpot. And let's see what happens next week. For next week, I see a reaction here on this down close candle. I see this reaction, yeah, this upward reaction. Now, is that enough an indication of price? Does it want to seek premiums, or does it want to maybe come down in this gap, maybe take out these lows? Both are possibilities on the weekly. I cannot be 100% sure. Let me just take a quick look at the Nasdaq as well. The S&P and the Nasdaq move hand in hand, so you can use, and regardless of if you trade the Nasdaq, you can use the S&P as your reference point just to validate your trade ideas. On the Nasdaq as well, while we saw bearishness on last week, we see rejection here as well, so could be interesting. Let's go down on the daily time frame. We'll get more information as we go down our time frames. All right, so what we see here, this week plays out. We see now this is a low. I see a higher low forming, an indication of bullishness. Rejection on the weekly, a higher low forming, also an indication of potential bullishness. I see reaction off of this down close candle, but is it enough to seek high premiums or further discounts? This candle is undecisive. It went inside of this gap from this high to this low. It came down and it also got a rejection here. So there is uncertainty, undecisive for now, and not a lot of clarity. Let's look at the 4 hour. By undecisive, what I mean is both sides of the marketplace are possible. Price can also go up, price can also go down. Yes, there will be weeks where you will face these situations. This is not an opportunity to panic. Instead, again, I will reiterate, respect the markets and wait for the markets to open, wait for it to give you more information, and using that information, you will then make up your mind whether price wants to go bullish or bearish. And as a trader, especially if you're trading smaller time frames, scalping or day trading like I do, you will find your setups, but you have to be patient. One of the fundamental skills you need to master in this game is to be patient, is to be disciplined and to be patient, to wait for your setup to present itself, to not go in a panic buying or selling spree. That is a recipe of disaster. Now on the 4 hour, we're at the S&P. All right, so I see price reacting off of here, accepting it as a discount, going up, then reacting off of this up close candle here, strong sell off, fails to break the low here and instead goes up inside of this gap here, but a rejection here as well. So price on this candle, I'm trying to keep my cursor on side because there are some positions of trades I took as well, so that will just come in the way when I'm showing you these charts. So but I hope it is easy to understand. I'm trying to keep it fairly simple and straightforward. Now on this gap, the high of the gap, the low of the gap, this gap I'm talking about, see how price rejected. This shows me resistance. At the same time, the very next 4 hour candle, price is rejecting while going down off of this candle. So undecisive. Both of these directions showing me resistance here, showing me support here. This tells me that price is undecisive. And again, remember, we have CPI coming up. CPI itself, remember, the stock market is considered a risky bet. If the interest rates are going up, the dollar is considered a safe haven. So the dollar goes up, people buy the dollar, people shift money from risky assets like stock markets, like crypto, and move it to safe havens like the dollar. And so because this is a high impact economic news driver, we will have to see how what data presents itself, and based on that we will see excitement and movement in these markets as well. As of right now, it can go both ways. It can go up, it can go down as well. So we will have to see, we will have to wait how the market pans out. If just to explore both the possibilities of what I will be looking at right now, I have resistance from down here, support from down here. If price breaks this level, I will then look for premiums. Just to use my fib to measure, I'll be anticipating or looking for price to play around in this area. If it breaks this level, I can anticipate price coming to this level. Because this is the nearest premium where I can expect price to react and possibly reverse, pivot back. So if it breaks this high, I can be looking to play around this area. At the same time, if I break this low, if I break this low in particular, then I can be looking at this low, or maybe this gap also seems interesting. So I have both possibilities marked out, this level or this level. based on how the trading happens on Monday. Again, I'm not expecting a lot of action. A lot of the excitement for this week I will be expecting after the CPI number comes out. But based on what the market presents itself, we will trade based on what the data tells us, not based on our own beliefs or our own wishes. So I've given you my understanding and my anticipation for the week ahead for the dollar, for the euro dollar, for the S&P 500. All right, guys, so that's about it. That's the tabsra for the week for the markets to come ahead. I hope you found this useful. If you like this video and want to see me giving you similar outlooks for the coming weeks ahead, drop a like. I will use that as feedback that you guys want to see similar videos in future as well. So the like button helps your cause. Second, if you are aligned with the anticipation that I've shared, let me know in the comments below how you are seeing the markets, particularly for these three assets. If you see something different, let us all know in the comments below. And finally, if you want to be notified when I upload my weekly outlook for the coming week, when we match whether this outlook has actually panned out in the week's trading, subscribe to the channel and click the notification bell so you will be notified whenever I upload a video and you do not miss any of my outlooks, and you, just like me, are well prepared before the markets open. So that's about it. Have a great week ahead. Manage risk wisely. Remember, protecting your capital is your primary responsibility. Have a great week, and I'll see you on the next one.